Key factors for Bitcoin to become a currency and store of value. This is a thought experiment and is by no means the finished article. In actual fact, I think it is highly unlikely to actually be effective, nor do I think it could be implemented, but I present my thought process on how the Bitcoin price fluctuation might be addressed. In actuality, price manipulation is closer to the thinking of a person or entity who is looking to damage Bitcoin in the short to medium term. Linking the Bitcoin price to the dollar is liable to be a disaster for both. Firstly, it is liable to actually have no impact on the price of Bitcoin, and secondly, is more likely to be damaging to the dollar. It would highlight the loss of value of the dollar over time. I present it nonetheless. My thinking on increasing liquidity in the Bitcoin ecosystem is pretty much common and holds no great surprises. Bitcoin is a decentralized digital currency that has gained popularity as an alternative to traditional forms of currency and as a potential store of value. However, one of the key challenges facing Bitcoin is its volatility. The value of Bitcoin has fluctuated widely over time, which has made it difficult for individuals and businesses to use it as a stable medium of exchange. To overcome this challenge, a price stabilization mechanism could be implemented to create more stability in the Bitcoin market. A price stabilization mechanism is a tool used to manage the supply and demand of a currency to help maintain a stable price level. Currently, the supply mechanism isn't built within the Bitcoin as a protocol. However, the creator of Bitcoin made no such attempt to manage the Bitcoin price. One potential price stabilization mechanism for Bitcoin is a pegging system. Under a pegging system, the value of Bitcoin is pegged to the value of another currency, such as the US dollar. This would help to stabilize the price of Bitcoin by ensuring that its value remains within a certain range, which would make it a more attractive option for long-term investments and savings. Another potential price stabilization mechanism for Bitcoin is a price band system. Under a price band system, the price of Bitcoin would be allowed to fluctuate within a certain range. If the price of Bitcoin were to fall below a certain threshold, the mechanism would kick in to buy up excess supply of Bitcoin, which would help to stabilize the price. If the price of Bitcoin were to rise above a certain threshold, the mechanism would sell off excess supply, which would help to prevent the price from rising too high. While price stabilization mechanisms can help to create more stability in the Bitcoin market, they must be implemented carefully to avoid unintended consequences. For example, a pegging system may create a situation where the value of Bitcoin is tied too closely to the value of the pegged currency, which could limit its potential as a standalone currency. Similarly, a price band system may create a situation where the mechanism is used to manipulate the price of Bitcoin for the benefit of a small group of individuals or organizations. In addition to implementing price stabilization mechanisms, creating more liquidity in the Bitcoin market can also help to increase its stability and attractiveness as a currency. Liquidity refers to the ease with which a currency can be bought or sold on the market. In the case of Bitcoin, increasing liquidity would mean increasing the number of buyers and sellers on the market, which would help to create a more stable and reliable price. One way to increase liquidity in the Bitcoin market is to create more user-friendly platforms for buying and selling Bitcoin. This includes creating secure and user-friendly wallets, payment gateways, and merchant services that make it easier for individuals and businesses to transact with Bitcoin. Additionally, increasing the number of Bitcoin ATMs and physical exchanges can also help to increase liquidity by making it easier for individuals to buy and sell Bitcoin. Another way to increase liquidity in the Bitcoin market is to encourage more institutional investment in Bitcoin. This includes creating regulated investment vehicles, such as Bitcoin exchange-traded funds ETFs, which can help to attract more institutional investors to the market. In conclusion, creating more stability and liquidity in the Bitcoin market is essential for it to become a widely adopted and trusted medium of exchange. Implementing price stabilization mechanisms, such as pegging or price band systems, can help to create more stability in the price of Bitcoin. Increasing liquidity in the Bitcoin market can be achieved by creating more user-friendly platforms for buying and selling Bitcoin, as well as by encouraging more institutional investment in the market. By working to create a more stable and liquid Bitcoin market, we can help to increase its attractiveness as a currency and store of value over the next 2 decades.